Imagine you're 10 years old. You have a paper route, and every dollar you earn feels like a treasure. Most kids your age, they spend it on candy, toys, comic books. But you're different. You take every hard-earned penny and you save it. Not because you have to, but because you know something most people never understand. This is how Warren Buffett's story begins. But the real secret? It's not just saving. It's something much bigger. Something so powerful, so quietly unstoppable. It's the reason Warren Buffett is richer than 99% of everyone who's ever lived. It's called compound interest. And today, you're about to see it like you never have before. When Buffett was just a kid, he found a book in his local library called 1,000 Ways to Make $1,000. That book didn't just teach him about money. It taught him about time. It showed him that money could work harder than he ever could, if he gave it enough time and the right conditions. Buffett started investing at just 11 years old. By the time he was 30, he was a millionaire. By 56, he was a billionaire. Today, his net worth hovers around $120 billion. Here's the mind-blowing part. 99% of Warren Buffett's wealth was built after his 50th birthday, and about 97% of it came after he turned 65. Think about that. The man is a legend not because he found some magic stock, not because he won the lottery, but because he understood one unstoppable force better than anyone else: compound interest over a very long time. Let's break it down. Suppose you invest $1,000 today. If you earn a 10% return, about the average return of the S&P 500 over the long run, you'll have $1,100 after 1 year. Pretty boring, right? But stay with me. In year 2, you're not just earning 10% on the original $1,000. You're earning 10% on $1,100. That's an extra $10. Doesn't seem like much. Yet. Fast forward 10 years. That $1,000 has become about $20,600. Fast forward 20 years. It's over $6,700. 30 years? Nearly $17,500. And in 50 years? That humble $1,000 could explode into $117,000. From just one decision. One boring, simple decision. That's the magic of compound interest. It's like planting a tiny seed and decades later, finding a massive oak tree you can't even wrap your arms around. But here's the catch. Most people never get there. Why? Because compounding only works if you let it. It's slow at first, painfully slow. In the early years, you barely notice it. It feels like watching grass grow. Most people get impatient. They sell too early. They switch investments. They chase quick wins. Buffett? He didn't chase. He didn't panic when markets crashed. He didn't sell everything because he got bored. He waited. He gave his money decades to work, and then he watched the snowball turn into an avalanche. Let's look at two friends. Emma starts investing at 20 years old. She puts in $200 a month until she's 30. Then she stops completely. In total, she invested $24,000. Her friend Jake? He waits. He starts investing $200 a month at 30 and keeps investing every month until he's 60. He invests a total of $72,000, 3 times as much as Emma. Guess who ends up with more money at age 60? Emma. Because her money had a head start. It compounded longer. It's not about how much you invest. It's about how long you let it grow. Warren Buffett once joked that he gets to sit in the shade today because he planted trees long ago. That's not just a clever quote. It's the purest truth in wealth building. Every dollar you invest early has the potential to work harder than a dollar you invest later. The earlier you start, the less you actually have to save to become rich. The later you start, the more you have to sprint just to catch up. Warren Buffett didn't get rich because he found the next big tech stock. He got rich because he started early, stayed patient, and never interrupted the magic of compounding. You don't need to be a genius. You don't need a perfect strategy. You just need time and the discipline to let it work for you. Because wealth isn't built in a day. It's built day by day, quietly, relentlessly, like a snowball rolling down a hill, getting bigger with every single turn. The sooner you start your snowball, the bigger it can become. So the real question isn't, how do I get rich fast? The real question is, how soon can I start my snowball? Because Warren Buffett's greatest investment wasn't in a stock or a company or a market. It was in mom time. And you can make that same investment starting today.